Meantime, the dollar just keeps on rising, and right now it's at its highest level since April 16th, 106 on the dollar index. Let's talk to Tim Seymour about this. He's CIO of Seymour Asset Management and a CNBC contributor. And Tim, what's interesting is that, we've still had, this is a headwind for certain commodities, but a headwind for gold, right? I mean, talk to us about the levels and their significance here.
Well, the move in gold is certainly disappointing to gold bulls, of which I am one, except for I'm not so sure that the reasons we wanted to own gold before the elections aren't still there, maybe even more so. I think gold's inverse kind of response to both the dollar, but also inflation dynamics is something that I think has clearly given it a pullback. Remember, gold outperformed the S&P from October of 22 to October of 24 in the best bull market, arguably, of all time. So gold's had a tremendous run. Doesn't surprise to see me pull back. The dollar strength has certainly put a hurting across the entire commodity complex. We've been talking about oil. You've been talking about oil. The world's been talking about to what extent it's an impact on the other parts of the growth trade. A lot of the dollar move to me is a combination. The last 6%, which is almost a straight line since October 1, is a correlation to interest rates. And I do mean long rates.
It's also interesting that Bitcoin is doing as well as it is right now, given that it should be a headwind like it is for some of the other commodities. So do you think this rise is sustainable? If you go back to after Trump's election the first time around, we saw a similar kind of run up in the dollar, which then traded sideways to flattish for the rest of his term until COVID. Is this an echo of that for you?
I think the dollar can stay strong. And I think part of the dynamic, at least of the rhetoric so far, both on tariffs and some of the global policy, but certainly fiscal policy in the U.S. is that there are a number of other central banks around the world probably not saying this, but thinking, hey, we have the ability to weaken our currency and really offset a lot of that tariff dynamic. Again, exactly. A competitive deval is something we've seen in the past. In terms of just the dynamics of the U.S. economy, part of the dollar's move is this, and this is a Fed that suddenly in December, it's 50-50 suddenly that they're actually even going to cut. So I actually think this is about central bank differentials. I think the dollar can stay strong. And look at the BOJ a couple of days earlier in the week as we hit 155 today on dollar yen.
Wow.
And it's a long way from that fateful August 5th day when BOJ made some noise. It was 141 on the yen. The world was crumbling seemingly. I think BOJ is going to be very cautious about getting tighter here. So
would this be a great global development? I mean, it sounds like it's maybe rebalancing in advance some of what's going to happen, maybe taking the sting out of tariffs even to some extent. Maybe we import less inflation, a little more deflation. Sometimes people say those strong dollars a headwind for stocks more broadly. I don't know. I'm just looking to see if you think this is kind of like a healthy move higher or not.
I think we've seen tremendous rotation, and I think we're going to continue to see that. I think it's fantastic for banks. I think it's been very strong. Again, it's about a yield curve now that's also as steep as we've seen it for a long time. So I think typically a strong dollar sometimes has been a risk-off moment. But I think in the face of a stronger U.S. economy and what are differentials to the rest of the world, I think it's okay. I think I manage an international ETF, IDEVO, and this is something where we've seen some of the international names, international banks like Barclays or Mitsubishi Bank or Sumitomo have rallied strongly with U.S. money center banks since the election. So there are places where I think you can invest and actually do well here. Right. But I think investors are recognizing that certain parts of the inverse dollar trade, commodities, you look at resources. I mean, a Freeport Mac, which is a name I'm long, and it's really had a tough run, even though everything we're saying is certainly commodity positive in terms of strong.
I forgot to do the mystery chart, Tim. It was Zoom video, a meme stock with a real story. Come back. We'll dive in next time. You're using Zoom right now. Tim Seymour on the dollar. We appreciate it.